This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, December 4th, 2014. So the euro has broken to yet another fresh 2014 low after taking out the recent consolidation low at 123.58. The break below 123.58 now opens the door for a fresh downside extension towards the 2012 base at 120.40. Ultimately, the trend remains intensely bearish and only back above the 50-day moving average, which currently comes in at 125.70, would compromise the bearish outlook. Sterling dollar. Cable remains locked within a consolidation off recent yearly lows at 155.85. A break below 155.85 will likely open the door for the next downside extension towards a measured move objective of 153.50, while back above 158.26 would be required to take the immediate pressure off the downside. Dollar yen. Dollar yen, it continues to extend its 7-year highs, breaking up towards 120, with the market now violently stretched across multiple time frames. The daily, weekly, and monthly technical studies are all well overextended, and the market is screaming for some form of a technical correction. However, a break back below the low from the 27th of November at 117.24 would now probably be required to open the door and trigger the onset of a necessary correction. However, ultimately, the trend remains intensely bullish, and the market should look for a higher low at some point in favor of a bullish continuation over the medium and longer term. Euro Swiss. Euro Swiss continues to extend its gains off of the recent yearly low at 120.09. The market stalled just shy of the critical psychological barrier at 120, but will need to break back above and establish above 120.45, the previous base from September, to take the immediate pressure off the downside. Aussie dollar. Aussie dollar continues to extend declines after breaking down to a fresh 2014 low below the previous base at 85.41. This opens the door for the next downside extension towards the 81.70 area. However, market participants will be looking for further weakness towards the psychological barriers that come in at 80. Ultimately, at this point, any rally should be well capped below this previous support, now turned resistance at 85.40, while only back above 89.11 would compromise the bearish outlook. Dollar CAD. Dollar CAD remains locked within a well-defined uptrend, with the market putting in a series of higher lows and higher highs. The most recent higher low is now sought out at 11.91, with a break above 14.67, the recent 2014 high, to confirm that higher low and open the door for a measured move upside extension towards 117.50. Kiwi dollar. Kiwi remains locked within a bearish consolidation over the past several weeks, although the market is favored to the downside given the broader bearish outlook and trend over the past several months. A break below the 2014 base at 76.60 would open the door for the next major downside extension towards the 70 to 73 area further down. Only back above 80.35 would compromise the bearish outlook. SPX 500. The S&P 500 continues with its assault to fresh record highs. The market recently put in a high on Wednesday at 120.77 and could be poised for fresh upside over into the end of the year towards the next major psychological barrier at 2100. However, technical studies are stretched here, so there is risk for a legitimate and healthy corrective decline. A break back below 2049 would be required now to trigger the onset of a correction and expose a move all the way back down to 2002 further down. That's the low from the 4th of November. Gold. Gold has mounted a nice recovery since basing out by 11.31. Those are fresh 4-year lows on the 7th of November, and the market is now comfortably back into the 1200 area. But ultimately, the structure remains bearish with the trend to the downside while below 12.56. Only back above 12.56 would take the immediate pressure or the medium-term pressure off the downside. That's all for today.